I'd like to
Thank you. I
yield
yield
now
back.
5 minutes to the gentleman from Georgia, the chair of the Agriculture Committee, Mr. Scott.
Thank you, Chairman Perlmutter. Ladies and gentlemen on the panel, I'm concerned about this, how technology and artificial intelligence is reshaping our banking system. And nowhere is my concern as great as it is impacting African Americans. Let me share with you why I say that. According to the Census Bureau, the rate of home ownership for African American families sits at 44% versus for white people, 74%. This huge and dramatic 30-point gap is a major contributor to racial economic disparities, and it is especially impactful in home ownership, which is where we develop and nurture our wealth consideration. So I'm concerned that this new technology, the use of artificial intelligence, and this inherent bias seems to be contributing factors in rejecting Black home loan approvals. And not only do Blacks home applicants receive higher loan rejections, they also suffer from race premiums on interest rates, paying as much as 8% more on mortgage interest. So, Ms. Hughes, you and Ms. Henry Nicky, respond to me and tell me, in your opinion, am I right here? Cannot you all see this disparity? And how detrimental is this secret bias hidden in some fintechs' lending systems for African Americans and other minority consumers that may be seeking a mortgage? How impactful is this?
Congressman, would you like me to go first or Ms. Henry Nicky to go first?
Oh, I'd love for either one. Go ahead, Ms. Hughes, and then Ms. Henry. I want to get both of your points in this, and I got 2 minutes.
Fair lending laws in the United States apply to banks, and they should be not causing either unwarranted rejections of mortgage applications or raise premiums in applications. I have not had an opportunity to study the degree to which fintechs and artificial intelligence may be contributing to a shift, but it's conceivable that Ms. Henry Nicky has or Dr. Henry Nicky has a more data on that subject. So while I believe that we need to be sure that people are evaluated fairly, then I don't have the data to give you a better response. I would ask.
Ms. Hick?
Yes.
Ms. Henry Nicky, would you comment, please?
Thank you. You've raised a crucial, important question that nobody else has sort of addressed today, and that is, what is happening to the state of the banking system when it comes to broadening access to credit for African American and Hispanic communities? And at the heart of that, at the heart of your question, stands fintech, right? To Mr. Reuter's point, leveling the playing field means that we need to figure out ways to ensure that our consumer protection framework applies equally to banks, non-banks, and fintech lenders. There's a good amount of research sort of coming up showing that fintechs have done an incredible job, I think a commendable job in expanding access to credit. But they are capable, just as their conventional lender counterparts, of reproducing particularly pricing disparities. At the heart of this is the kinds of data sources that they draw on to inform their machine learning algorithmic models. We've talked ad nauseum about machine learning bias here, and all of these are in play around suppressing that 44% number and driving it even lower. We need the CFPB to have a leg up when it comes to fairly protecting consumers across all of domains, particularly when it comes to fintechs, and they're shaping the market, but they're escaping their responsibility and the oversight around consumer protection. And that's what explains, and it's at the heart of how these disparities will continue to grow and not improve in the future.
Thank you very much.